Welcome to The Explainer. Today, we're going to untangle the world of goods and services tax, that's GST, specifically for anyone selling products online in India. If you're running an online business, you've probably had this question pop into your head more than once. When a sale happens, who's actually on the hook for the tax? Is it you, or is it the giant platform you're selling on? Well, let's dive in and get that sorted. First up, let's meet the two main players in this whole game. You have the e-commerce operator, or ECO for short. Think of the big names, right? Amazon, Flipkart, basically anyone who owns and runs the digital marketplace. And then there's you, the supplier. You're the one with the awesome products, supplying them through that ECO's platform. So the moment you decide to sell online, you've officially stepped into the world of GST. And it's super important to get this. The rules for a digital marketplace are not the same as for your local corner store. Not at all. And here's the first big rule you've got to know, and honestly, it's a game changer. Unlike a physical shop that might wait until it hits a certain amount of sales, if you're selling online, you almost always need to register for GST from your very first sale, from rupee number one. Now, there are a few very narrow exceptions for small-time sellers making local sales, but for the vast majority, yeah, you need to be registered right from the get-go. Okay. Now, for the most important idea in this entire explainer, seriously, if you remember one thing, make it this: a system called Tax Collected at Source, or TCS. This is the absolute core of how GST works for e-commerce. So what is it? Put simply, the law says the platform you're selling on has to collect a tiny slice of the tax from your sales and pay it directly to the government for you. It's not an extra tax, don't worry. Just think of it like a prepayment or a deposit made in your name. The whole reason for this system is to create a clean, digital paper trail for every single sale, making it much easier to track everything. And this breaks down exactly how the money moves. A customer clicks buy. The platform collects the full payment. Then, before they send you your share, they take out their commission and they snip off that small TCS amount. That TCS goes straight to the government and the rest lands in your account. It's all automated, all happening right at the source of the transaction. So, what's the magic number? It's 1%. The platform collects TCS at a rate of 1% on the net value of what you sold. Now, this 1% gets split up depending on where the buyer is. If it's a sale within your state, it's 0.5% for the central government and 0.5% for the state government. If the sale crosses state lines, it's a simple single 1% that goes to the central government. All right, so the platform is collecting some tax for you. Does that mean you can just kick back and relax? Not quite. Let's talk about your role in all this. What are your responsibilities as a seller? Think of this as your personal GST playbook. You are still the one who has to file your regular GST returns. You have to report every single sale you made on that platform and figure out your total GST bill. And then, and this is the key, you get to claim that TCS the platform collected as a credit to help pay down that final bill. So how do you get that credit back? It's pretty cool, actually. It's totally automatic. When the platform files its special return, called a GSTR8, the TCS amount they collected from your sales just magically appears in your electronic cash ledger on the government's GST portal. It's literally like they're putting money into your digital tax wallet, ready for you to use. Okay, we've covered your job. Now let's flip the coin and look at what the platform has to do. They've got a pretty strict set of rules to follow to make this whole system work smoothly. The platform has 4 key jobs, and they are non-negotiable. 1, they have to be registered for GST. 2, they have to collect that 1% TCS from you. 3, they have to deposit it with the government on time. And 4, and this is the one that affects you the most, they have to file that detailed GSTR8 report. That report is the crucial link because it's what tells the government exactly how much credit to put into your digital wallet. So, to boil it all down, the platform is like the initial tax collector, but you, the supplier, are the main taxpayer. At the end of the day, you're the one responsible for your total tax compliance, for filing your returns, and for using that TCS credit to settle your final tax bill. So what happens if somebody doesn't follow the rules? Well, this whole system is built on both sides doing their part, and if that chain breaks, the consequences can be pretty serious for everyone involved. And the law does not mess around. The penalties aren't just a little slap on the wrist. The fine starts at 10,000 rupees or the entire amount of tax you tried to avoid, and you have to pay whichever one is higher. That whichever is higher part is what really gives this rule its teeth. Just look at a few of these examples. For a platform, if they mess up and don't collect the tax, or they let an unregistered seller on their site who should be registered, that's a hefty fine. For you, the supplier, if you do things like claim tax credit for goods you never actually bought, or you try to sell stuff without an invoice to hide it, well, that can lead to major penalties. And in really serious cases of fraud, we're talking about possible jail time.
All right, let's wrap this up with the 5 key things you absolutely need to remember. 1. Getting registered for GST is pretty much your first step. 2. The platform will take that 1% TCS from your sales. 3. That TCS is your money, and it'll be waiting for you in your digital tax wallet. 4. You are still in charge of filing your returns and paying the rest of your tax bill. And 5. You have to play by the rules, because the penalties for not doing so are serious for everybody.
Look, understanding how all this works is the first most critical step. But the next step is making sure that every single sale, every transaction your business makes, is fully compliant. Getting this right from the very beginning is truly the key to building a successful online business.